Wake up, goddammit. Welcome to MARKETcast with Unk and Market Monk. Morning, P. How's your week?
A little quiet for me early in the week, and then just kept hitting some crypto stuff pretty small. Saw something building there, and then kind of got the payoff Friday. Pretty much what I had said I was going to do. You just sort of find a way to position yourself for that move. Don't want to overexpose yourself in options. And actually, let me give a quick kind of illustration of what I mean. So, if you bought weeklies on Monday for MSTR, waiting, trying to hold for the whole week for like a big move, despite it going up 9%, you would have barely broke even given how, premiums decline as the week goes on. So, this is why kind of what I mean by the 20-minute trade, that you just find a level that works. You keep you keep hitting it, but you got to take your money. You got to trust that it's going to come back. And even if it doesn't, you find a pullback kind of on the way up to get back in. That's how you have to do it option side. If you want options, you're going to hold a long time. You're going to either put thousands of dollars into it, or you just need to go for the smalls. So I just encourage people, keep trying to absorb our whole approach on crypto. Kind of find your own, because it is still going to be a sector that's going to have a ton of range in the coming months, I think.
I'll probably have a chance to come back to that, so I'm gonna go my normal route. Good week over here. I didn't get the NVIDIA effect this week though. I noticed that definitely in the psychology side, like when NVIDIA makes you count, go over gold almost the first day. Um,
Yeah.
it's just
Right,
like
right.
psychologically, it's a little different than when you don't have that. And it's probably really psychologically different. It goes the other way on you. But just like I'm having that effect this week, I kind of noticed that. Was really bullish last week though. My SPY numbers when we get into that, we'll review that. But just staying in the same stuff. Fubo save. Rum was big. Pretty much played that every day. And then the airlines overall, pick and choosing on them ERs, 2 for 2 start the year here. So um, not bad stuff. For me, it's a little different share side. But it's a little easier when it slows down as long as it doesn't stop. And yeah, the MSTR kind of just when you were saying that kind of stuck out. So I'll touch base on that later. But good week overall. Plenty of opportunity out there.
There is, and some of the longer range thesis or theses that I had about oil and copper. That I had a chance to take a little bit of profit from oil, but still kind of building for what I'm seeing um, down the line. So I think psychologically, you got to kind of know what you're in, and these oil's gonna move up. It's gonna kind of pull back to our levels a little bit, but overall, kind of the structure of the move is all still there. So just been trying to plan around that. Thinking back to the last couple times we made a move like this, and you just get your names you like, and find a way to be in it, not something to chase. So you want to kind of get in now, I think. And if you're late on something, you find the laggers. There'll be plenty, especially in oil. A lot of those mid caps, small caps too.
Yeah, I oil's interesting just because of other theses that I have. Um, it's not necessarily like I don't know how to say it because I wasn't thinking. We don't script it around here. um, the bigger the tech, I guess. Even though I don't want to just harp on them or say them, but just those kind of just the other stocks when we get into the cold dark winter of the economy. Um, you know, the oil does really well, and that's back when the staples we've been talking about do really well, and that's because you have to have that stuff. That's where the money goes. That's like the only businesses that stay afloat because other things shut down. You have to natural gas, you have to heat your house. Oil, you have to, run the world in some fashion. So I that's always where that rotation comes from is in a downturn economy. So I totally get that, especially with my EV thesis. I'll just throw that out there. That's what I was thinking of in the first place, how to incorporate that. But just in general, oil should have its day on that regard, on just the world kind of slowing down from this. I don't know what you want to call this November to January we've had, but it's extremely too hot. Let me just say that it's 100 degrees in here.
And oil moving to 78, kind of getting
Mhm.
into that $80 break is going to be pretty big if that can happen. So that's going to do a lot to move those as well.
Yeah, and oil was like 125 in that run coming out of COVID. I mean, not that we could even have to get there, but there is some decent range even back into like the 90s, which would move charts
Yeah.
dramatically, I would think. Um,
Yeah, that's that. Some are easy to see how they'll correspond than others, but that's where you get ZOM in that 110 to 115 area. So if it adds under 100, do the math on that. Um, you're not gonna. It's not a multi-bagger, but it's a nice foundation for any account. I think to have some positions like that.
yeah, yeah, no, people probably are thinking, well, why, when the economy's going down, oil should be cheaper? And that's just not how it works. It's a controlled commodity. It's like diamonds. They just control the price on it. They just turn production off, fire people. They just stop producing it because there's no demand, and then there's limited supply, and it goes up. And it just really starts to fluctuate if it's not stable. If the market doesn't need, I don't know the number, you probably do, but 100 million barrels a day or whatever, and it just starts going one direction or the other, that's where the volatility comes in the overall price of oil. So the market wants to stay stable. So any direction it turns is going to be bad for it, and that's just what I see. I just see that because man, these reports that I've read so far, even though I don't want to talk about ER, is a lot of not looking good going forward and pretty stagnant numbers in general. So um,
Yeah,
yeah,
I mean, even in the AI stuff, if you look at what Intel did, that in to me, Nvidia is kind of the only game in town, and then it's about how other companies are positioned in relation to them and their deals and relationships with them. One of the reasons I like Oracle has a favorable setup with Nvidia because they're not a direct. They're kind of on the software side. They're not a hardware competitor. So that hold that Nvidia has on that whole chip market um, is really going to limit what some of these other ones can do uh, going forward, unless they have kind of a specific niche that they're filling, like Amba is like that in some ways. And so anyway, so that's kind of what I look for. And the way people talk about the AI bubble, to me, it's not like something that's just going to burst and they all crash, but the market's going to sort out winners and losers. And in ER reports in particular, even if their numbers are okay, they're going to give you that one sentence in guidance that can just tank a stock 10%. And I think we'll continue to see that on some of those names.
yeah, no, it's very pick and choosy with Nvidia. What I mean, the more I look, I mean, obviously I have to look into it. That's what you do when you own a stock. You constantly research it to make sure your thesis is correct.
Yep.
They seem like the only one making money. That's really what they do. I mean, it's not
Yep.
like this super
Yep.
duper technology. They're just the only one that make money. It's not more customers, and it's why I say that. It's the same thing as Tesla. They're just the only EV that makes money. I mean, that's just how it is. I mean, and those ones are going to be more profitable or more, I guess, successful in the market in the long run because they've already turned profitability or they can turn profitability. Um, yeah, but I like semis, but I don't like where we're where the leader is, I guess. And I'm a holder of it, right? So that's a hard thing. But you kind of if you got into the
If this is a
go ahead.
I mean, if it's a race, they've already lapped everybody 10 times, and so it's
Yeah,
kind of like,
yeah.
where do we go from here? And AVGO was my pick, kind of instead of Nvidia. It's done really well, um, for different reasons though. But yeah, so I think that the whole market breadth thing, we can kind of get into that too. Um, it's as bad as it was the last time we mentioned this. That was before the October pullback. The fact that hedging is so cheap right now to the downside. I mean, there's just reasons to be cautious, and I'm still kind of in that mode between now and March. Not particularly bearish, but also not wanting to chase some of these names, or be stuck in a position through earnings where share side's going to get nuked 12% or something like that.
Yeah, no, I try to we try here to stay out of the this, that, and the other. I mean, we do have the Feds this week, and pretty sure they're going to pause still. I don't think they're going to go either way, and I think the market will
Yeah.
digest that okay because that's on the schedule that they still have in their head. They is everybody that talks that I hear. That's what they
Yeah.
think. That's what
Yeah.
they think. Um, but yeah, I just for me, it's a good time to go to what I know, and that's the psychology side of trading. And for me, it just makes it easier to take that $200 I talked about last week in this market, right? Like we're not buying bottoms. It doesn't have a lot left. Um, and if it does, it's a part of the thesis on an individual ticker. But your overall regular stuff, like your QQQs and your spies, like you're trading. You're just taking your money if you're trading that, or your SPXs. Shout out, Goose. You're taking your money on those, in my opinion.
And
It's
well,
just
here's example for me. Roku last time under 60 to over 90, ended up going 100 and something, but this round it was off the 83.95 line I have, went to 92.
hmm
You get out,
yep.
because okay, now it's 89, and it had dipped to 88, and it's like, we talk about more room above than below. That's not where it is right now to me. So that's why, like, I take the 150 on Roku instead of trying to get 1,000. Because if you do that, you end up break even or worse, and I just don't not a spot I want to be in.
Well, yeah, and eventually you do this long enough, and you'll know when that's really there instead of every time. You'll be able to know
Yeah.
when it's the news is right. All the conditions line up for that. Just all right, this is finally it. Or you just see the volume, and it just never comes back. That's why I like shares because you don't get those big dips back below your entry. MSTR is going to be a great example when we get into crypto on that. Roku, sorry, I apologize, sir. I said 85. It was 83. I pulled it out my ass. I'll do better next time. But I mean, that's what it
No, it's
is.
all good. But
That's what it is. It's like
yeah, yeah. The
you're
whole
not
thing there
gonna
was,
go ahead.
yeah. The whole thesis there was, okay. Netflix has earnings. That sympathy plays a one-way street. Netflix doesn't move on Roku, but Roku moves on Netflix. Been doing this a long time. Seen that. But it had that pop. Wasn't nearly as much as Netflix. Didn't have the follow through, and so I'm like, okay, I'm just going to go ahead and go ahead and get out, because if it didn't move on my thesis as much as I thought it would, I was already positioned. I took a win, and then we go from there, and I'll just let it set up again. Um, you don't want to try to convince yourself that, oh well, it's just going to take a few days. This is going back to 96 or 100, or um, I just don't think you can trade like that in this environment. And it's why we talk about trading philosophy. I talk about those call and put triggers people tweet out. They're way too far from the price. It's a good target, but once it gets there, there's exhaustion, whether it's buyer exhaustion or seller exhaustion, and that's why the even though we're at all time highs in SPY, a lot of stuff is still kind of sideways, pop and fade. That's sort of the mode you're in, and that environment is magnified if you're trading options a lot. So that's something I think people should be aware of.
Yeah, my thing on Roku, I mean, probably even more so when you bang out that killer entry, um, which I know you did on that one. I know you were way down there. You you still wouldn't want
Yeah,
to be in one trade because you if you were in one trade from the beginning right now, your head would have went, I made this almost 100%er. You're probably in your head like almost to 100%. I'm talking shares. Sorry, sir. I don't know your option math. Um,
yeah, yeah.
I
Right,
almost
right.
I almost made 100%er. I'm like right there, I'm right there. And then you get this pullback and you're still in the trade and you're like, oh no, I'm only up, like 50. And then you just psychologically you're in this washing machine instead of like I had a good trade and then I just had another good trade. I had a big piece of pie, just like I was at grandma's house for Thanksgiving. I had a big piece of pie. You know what? I'm gonna go get me another little slice. And instead of like wondering, man, is this whole pie gonna be there? I'm gonna wait till I'm totally hungry and I'm gonna grab the whole goddamn pie. No, Uncle Ted's gonna go get a little slice.
Yeah.
Everyone's gonna get a little slice before you. So you're just better off taking if you get, especially on the good one, right? Because you watch the whole damn trade. That's why we say stay on the ones you're on, because you watch this whole move. So you might as well stay there, watch the pullback, see the same conditions develop again, and take another piece of that goddamn pie.
Yeah, absolutely. And I mean, and the fact it didn't break down fully like it did the last time it popped back in September. I mean, that was significant to me. So I think this pivot will still be active. And overall, for me, the thesis on Roku still 120 to 160, something like that.
Hmm.
So it's just a question of kind of from where, what do I want my share average um, to be, and that's kind of what I try to
I already told you that.
try to build towards.
I already told you
I know. Yeah,
that. um, why we're here? We're kind of on the the management stuff, and what I'm noticing, say no names, or when I see on Twitter, nothing like that. No one take it personal, but your account size is gonna dictate the number of plays that you are in. It just is. I see a lot of these like in 6, 7, 10 plays, and you know maybe got 15, 20, 10. And it's like, that just doesn't make no sense. I mean, I understand it's like they take the diversity rule, right? Like, I'm have a diversified portfolio of day trades. It's like, what the hell are you doing? That's not a good thing to do. Less is more, bud. Just like
and
slow, you got to slow down and pick the winners. For me, like you're getting a good spray, but you're not understanding if you can pick winners or losers in day trading. And I think that's important.
right,
Like maybe three a week for you and see how you do, and you can go up one if you're 2-1, and then the same thing next week. Anything that's 50%, you stay where you are. If it's above it, you go up one trade a week. You know what I mean? Like set a rule for yourself, work into it somehow, like earn it. But just starting out, like I'm throwing, especially options, or half options even. Good time to talk beef, P. Um, you really need to slow down a little bit and not full port it. Like just trade with half your account, even if it is only 10, 15K. Like you're gonna use that to re-enter the next trade. Spread out you still have to be all in all the time. I don't know. I don't know. It's just something I've caught lately.
yeah, and definitely, and something too that's always revealing is once they get to, I mean, it's not even afternoon, but like mid morning, and they're trading $30 SPY
Yeah,
options.
yeah, no.
They're out of money. They're out of
Yes.
money, and they're out of money. Even if I'm not even saying like they have a $200 Robinhood account, I'm saying like they have 5,000 that they traded already that morning, and they're just going to trade with every little bit that they have left. And that's just not good. That's just not good planning, because even if, they like to brag about the 100% they get on the move from, $24 to $48. How many of those can you really buy? That's kind of my question. Um, because they can so easily go to $10 with one 5 minute candle or worse. So the risk reward is not, is not great on those, and so they just sort of keep going back, piling in, and I think the hardest thing to do for people is, if your early morning trades don't go as well as you hoped. This idea that you either have to make the loss back, or you're kind of flat, or you're up $70, and it's like, well, I need to push further. But the market isn't, you had a plan going in, it worked or it didn't work, and now you're trying to come up with a new plan kind of on the fly by randomly just looking around at what's moving. um, that's not the way that this works for me, and I don't think it really works for for many people. And I get like this. I get nervous when I see people say, "Oh, I'm off work this week.
Yeah.
I got time to dive into this and
Yeah.
trade." Yeah, the thing is, like, that doesn't mean that the market's going to be right for that to for that to happen. Like that, I'm here, I'm locked in, I'm looking at charts, I'm going to trade now. Um, that's not that's not a good process. You're going to overtrade because you're excited about having time to trade. It's better to just build a trading style around your life and just always do that. What Regardless of how much time you have off, or whatever. And if you have extra time off, use it to study. Don't use it to trade. Uh, that's kind of my biggest thing. And then real quick on, the beef analogy. Okay, so for me, being someone who does trade options, and recognizing that options only and starting over every day is not a good way to trade. It's not really viable long term. Um, and so what I try to think of the way I try to think about it is, the you order a burger, whether it's a good burger or not, no matter how much of the extras and the sides and the special breads and whatever, it's the beef of the burger is going to determine if it's good or not, right? So the beef of any position, the bulk of any position, for me, that's worth having, is going to be shares. And I go with 80%. I try to have 80% of my position in shares, and then the rest is options of different types and strategies. There's two pieces of bread, right? So one piece is, that's where I'm looking at leap positioning. If it's a trade worth having that I think could be a swing trade, I want to be positioned in some leaps on that. And then the other bun, um, monthlies, quick hitters. Um, don't really want to stay in those that long, but they have enough time where, for me, one bad day on that stock is not going to kill that position. That's where I want to be with those. And then, your extras, your uh, your toppings, your whatever, like, you go to Fuddruckers and whatever you want to pile on there. Those are the weeklies, because if I am in a trade like that, there are going to be some situations where, weekly options, that play is there. Even in something like Oxy, has a big flush to my level. I'm like, okay, this is gonna bounce. I'm gonna do a smaller trade there, and I try to stay focused on one, that stock and that profit for that stock. And so, like, I'm willing to say I make some trades on day trades on Oxy. They work well. I add to the other positions, and so that kind of keeps me balanced. It allows me to stay in the play. And one of the things I talk about is, I want to get the benefit from the work that we do. And I can't focus on 10-day trades at once, but I can have positions in levels and stocks I believe in, and doing that share side, even if it's very small, um, pays off big. And my recent example of that is, we look at the stock now. service now. I had one share of this thing, okay, but I had one share at $560. I did day trades here and there on it. Leaps are way too expensive on a stock like that, so I didn't mess with that. But that one share, I sold it before ER, $765. I mean, that's your one share, gang. But that's $200 on one
Exactly.
share of one stock. So percentage wise, it all worked. And I never could have stayed in options that long on that thing. There's just no way. 560. I mean, you hit 600 psych, I'm out. And then it's taken off. It's hard to re-enter. But you had the share, and the share worked. And I do that with pretty much most of the stocks I talk about. And even if it's a fractional share, finding a way to stay in it. I mean, that's really the only way you can do it. And it keeps psychologically, it helps from feeling like you're just starting over every day. And I can't emphasize enough how much that can wear on you if you're in that position.
I didn't take notes, but I got a lot to unpack here. Um, so yeah, I think that's the thing. If you were getting the skill set rating for your NPC character, you would definitely be all the way up
Yeah.
on nailing the just the proper amount of study time. Like something I definitely picked up from you as to be more diligent about. Use more of your time to find the good play instead of just trading more, or however you need to sell yourself that you're going to actually have to do some goddamn work. Um, and when you do work, you usually get better results because it's the setup, not the stock. But the Twitters, and the callers, and I just posted it on my page. You need to set alerts. You don't need alerts. That's what you need. And the people that are alerting, um, if they're in that account situation I talked about before, when it's like 10, 20K, somewhere in that range, and you're all in, and you're just all in every day, everything Professor said when you got that going, and you're all toppings. You got just cheese and lettuce and mushrooms and onions and bacon, and you're screaming about your bacon. Um, one bad day doesn't just ruin the day, the week, the month. It ruins the fucking account. You take a hit when it's all in like that, and that's really what happens with these guys. Where is I can like speak for myself. I trade shares. I don't know if y'all noticed that, but I just trade shares only, and usually a bad day at most, even if I wake up and it's like you know something's on fire somewhere, it might be the bad week. It might take a week away, but it's not taking away a month. Not before I can do something about it, and it's definitely not taking away a quarter or a year or the account. It's just not going to happen, and that's the main difference between most people I see out there and what we do. Is it's structured more to protect your neck in that regard, um, and just the longevity of it. You're just not going to make it. I had another point, but I forgot about it. But you just in the long run, you wanna have that in your arsenal anyway. Oh yeah, so a lot of those guys when they do take a hit, they take on water half the boat, right? Um, they do slow down and say, all right, I'm going to try this. And even the ones that make it figure out, like, I need to play the slower stuff, not necessarily shares because they won't ever go there. They have this roaring kitty. I can make money off options, which that dude swung options anyways. But they have this I can make $1 million off options. Um, they slow down. They figure out, all right, day trades I just can't do every day. Just like you're saying, it's impossible for me to do every day. So I am going to be in these swing positions. But again, they never get that sizing right. So again, one more big hit, and they just keep taking these big ass punches. Um, so the toppings analogy and the buns and the burger and all that, Professor knows perfectly. You really need to spread that out. I think in the long run, you figure out you just don't like onions and tomatoes and stuff, and you just need meat, maybe a piece of cheese, and the buns.
Yeah, and I saw it. A lot of those dudes have just got killed on Tesla,
It's because it's all
and
in, P. It's like you're saying, they're not diversified
yeah,
and they kind of just put the account in and they run it. I started like trying to figure out what the hell you were talking about when you said they only had $30, right? Because I was like, okay,
yeah,
so
yeah.
what's the structure of that? And that's the problem is when they take a hit, it's not like, okay, I lost the day or I hit my daily thing. They lose the account. And when they double down on these bullshit theses, you see it. You know how those come on, how are those trades going, people? If you sit in some option plays for a month and keep buying and it just loses like 20%, how you think that's doing? I mean, just be realistic. It's yeah, trade some shares.
So, and yeah, here's the thing with options too. Like, so let's say that you get your option swing and you buy out of the money, something reasonable. If you're 5% out of the money, and but the problem is, once that stock goes down, now you're 15% out of the money, and there's a whole different dynamic for how a 15% out of the money option works compared to the 5%. So if you're gonna average down, you can get yourself in some real trouble because you are in a position that can go to zero, and you didn't buy that thinking you were in a position that can go to zero. So you have to think really hard about how exactly you want to get out of that. And if you're gonna re-enter, if you didn't call the bottom or whatever, you're gonna re-enter. You don't have to stay in that same strike you were in. In fact, it's usually a bad idea to do that. So learning when to just cut and take a loss, thinking about some of these guys were so, I don't know why they're so confident in Tesla at $250 that they didn't even hedge anything through earnings. I mean, that's just a disaster. So I mean, you want to look at a trade. We had someone in the room, Humana. I didn't think it was going to fall like that. I didn't really, I said like it's short term bearish, long term bullish. So to me, that meant like maybe it'll drop 6-7% on earnings. That's how the whales were positioned. 15%, that was crazy. I didn't see that. But he was hedged. He had a lot of shares, but I think he spent $500 on puts. Um, Sold them for like $6,000
Hmm.
and was still slightly red on the position.
Yeah,
But
yeah.
that's what a hedge is. Like it just gives you that you just didn't get killed on it. It gives you that flexibility. And then he decides, well, do I want to buy a few more shares down here? What do I want to do? And that's a really smart strategic plan he did. And so that's what hedging is. Hedging isn't I'm just gonna just load the boat on weekly puts without any plan at all, or I'm going to go into earnings with calls and puts and end up getting killed on both of them. I mean, that's not hedging. It's so hard to do, but I saw real progress with him there, so was really proud to see that. It's a stock you believe in. You still got a long term thesis on it, but you're going to protect yourself through a major catalyst, which was earnings in this case.
Yeah, no, with the share side stuff, like that's why I preach that fair market value. And in general, if I do drop numbers, it's kind of like a price I know that's going to come back, just so you can, if it doesn't go your way, you can get out of the trade. Like just option side, that's impossible because of time, and you're trading into volatility or something that if that goes away, like the volume dictates the price so much over there. No real support level in an option chart. Like it's not, oh, this isn't going to go below $1. Like that doesn't really work out over there. Um, so like for me, it's almost a different strategy in that regard. But I think where we agree is you have to kind of be early in that last minute. Um, we had I'd say no names, no names, but we had someone ask like trading Tesla puts the day or day or two before earnings. I mean, I was confident where it was going to go, but I mean, you should have been in that a long time ago, in my opinion. And I don't make that.
220.
Yeah, I don't
Yeah.
make that. Yeah, you. That's where you were saying it, but I don't make that decision. I'm just the guy that
Yep.
says, hey, we're going the other way, folks. If you can do something with it, take it. Like I don't understand when it works for you, or when it's best for you. That's your department, right? And I know it's not last minute, and yeah, yeah. So I kind of wanted to I want to put you on the spot a little bit about that. On like, just like good points on why you don't do that shit and why you want to be early on your side. Why I guess you probably should already taken your money on a put for Tesla earnings and been in a winner for
The
a runner.
right. It was pretty simple for me. That so my level for Tesla, that that 192, obviously broke down below that. That's all good. But what my thinking was, okay, so how much is 192 strike for a put? A weekly put, it was it was still almost $400,
Okay,
uh, and that's a lot to
to
put in,
gamble. Yeah, yeah,
especially when yeah. Well, I'm like I how can I cover myself here? Because I didn't see real upside in Tesla. If anything, like it could be flat,
flat.
maybe.
Yeah, and it's like a
I,
third. It's a one
yeah,
third bet, right? Like it's a like you have
yeah.
33%
So that
chance. It's
there are strategies where I could you could sell calls and all that. I mean, you're getting really complicated and pricey. So to me, I'm like, it's not worth it. And then the payoff for that. I mean, obviously those puts went up huge because they went deep in the money, but the the potential there, of maybe this will go 100% or 200%, whatever, but the loss can be 100%, like that. I don't like to be in something like that.
at
And
400
and
bucks.
if
Yeah.
I'm if yeah, if I'm gonna be in something where this can go to zero, I want it to be the $50 WD-40 call, and that I sell for $200.
So when you were in
Those are the kind of earnings plays.
when you were in the 220s, which wasn't too long ago, it was a week or two ago.
Yeah.
Holding a runner from there, what? I mean, are you already just making too much money from the first trade that it's like pointless to even attempt to hold on to it? What's that game there?
Um,
Like,
No, if you did have a runner, at the 220, I mean, for one thing, it would not have been one that expired last week, because you the risk of holding that, especially when it was kind of holding around 210 for 3 or 4 days, like, you're just bleeding out so much in that consolidation that you wouldn't have done that. The way to have done it, you get the 220, you get the kind of the big breakdown to 210. You can roll some of that as your runner, set it February something, and then keep it. I think that, yeah, that's perfectly
you
fine
couldn't have bought
to
February like
do.
February 190s off the rip or February 200s off the rip in like the start of the year. Those are too expensive. Is that what we're getting at here?
Yeah, yeah,
Okay.
that's right. That to
Well,
me they are. Yeah,
yeah, I don't
you're
understand that. So,
six, seven, $800.
are
You're
you going
just
to be down?
locking up a lot of your
Are you going
money.
to be down? Are you going to be down quick? Or is that like so? If you buy 190s at the start of the year and Tesla drops like 225 to 220, are you just green the whole time? Are you going to be staying green?
Yes, you
Okay,
are,
okay,
but
okay.
it's enough green. It's so much green
That
that
you take it. That you take it.
you, know, you take it forty
Okay,
percent, 50%.
got you.
Yeah.
I got you. Well, I'm just trying to figure out why they don't. I mean, come on. How long have I had this Tesla plan for? Let's just be real. How long did I have Spy? Remember when I was pounding the table on Spy on 460?
Yeah.
Like, why didn't you have 460s for January?
Yeah. Yeah.
Right? You would have been fucking. I mean, you should have been buying a house with those, I would assume. But I'm thinking it's because those contracts are too much money to hold that long, right? Is that what it is? Like, it's
It is. That's what
okay.
it is.
Well, then why are
And
you
I
even
think
fucking trading options? You don't have enough money to do it the right way. Like to the good thesis is you can't afford. Not you. I'm sorry, I'm not talking to you, but just in general, like a ten thousand
no,
dollar
no, no.
account,
Well,
a $10,000
okay. This is
account can't
why
properly trade spy options.
when people bitch at me about how much options cost on something that's working, I'm my only thing I can say is two things I say. They're more expensive now. That's what I usually say when
Yes.
they talk about MSTR or whatever.
Yes.
And then the second thing is you got to find a cheaper stock,
Yeah.
and they're out there. And you're not going to find better coverage of the cheap stuff than you're going to find in our room, and even the shares that move like options. So you need to be looking at the 8 to $10 stocks, or the ones that go 8 to 12, the ones that go 350 to 5, the 6 to 8, like those things. And you just got to kind of let some of them, let the sexy stuff go. You're If you want a piece of those stocks and you believe in them, get your fractional shares every week. Just keep buying it. But you're the idea that you can responsibly trade options on some of this stuff every single day. Man, it's hard to do that. And you're not going to be the chances that you're in it when these big fat candles happen. It's tough to do when you're locking up half your account in a $400 option on whatever, on Tesla, or it's just it's not sustainable.
Yeah, the
So get consistent, build your account enough where you can legitimately trade this stuff.
I totally, yeah, and I want to double down on the percentages. I mean, probabilities gambling, however you want to put it. Like share side, you can be flat, you can go up, you can go down. So you kind of have a 30 win, 30 tie, 30 loss. It's real that flat is almost detrimental to you on the option side. Flat lose you're still going to lose money. So the odds are just a little bit, or probabilities are just a little bit more stacked against you on that side of the table. Um, so just have that in mind. I think that's why. What I'm not saying don't do it with that. I'm not at all. I'm just saying that you should be quicker to take the money on that side. And I mean, unless you're batting 1,000, you're batting 900, and then hey, let one or two of those run, but not as a strategy. Just as much as I can get out of this orange every single time. Um, let's get some
Because
spy. Go ahead. Go ahead. Go ahead. Then we
oh
get some
yeah,
spy.
real last thing on that, like the losses that people take, they're taking 40-50% losses, and then their wins are 15-20%. Not a math professor, but that doesn't work. It just doesn't. So figure out what your percentage is on your losses, and keep track of that. And don't try to get out of that with your multi baggers. It's just really hard to do. So
Yeah, percent,
yeah,
percent,
that's my
percent,
last
percents don't matter,
lecture.
bud. Percents don't matter. All right, hey, we blew the top out of this thing. You had
Yeah.
184, I had 187, and it still wasn't enough. We got 489.12. Um, bottoms, look at that too here. 82 was the bottom. I had 75, you had 71, so we still were below this candle. Um, I'm just proud of myself that I got off the sideways or down and said, "All right, let's just run with the bull." So
I still some of these longer term positions that whales are in, they're about $100 down on this 920 405, and they're also not. They didn't really add much to it this week. So to me, they're kind of they're just sort of parked in a hedge there, and not really seeing much movement there. I will say that you do have there's a really big position opened up in 425 for March. That's
ooh,
I don't know.
that's close to
That's way down
that's
there.
close to the line. We haven't
Yeah.
put any other
Yep.
lines on the chart. I thought this was coming back that 440 area, but man, that even that would be like you're saying. It's a stretch. Um, first thought I have, P, is because I try to find something that fits, but this could be a really good inversion of Biden economics. Bidenomics is working. Vote Trump.
Yeah.
Because and hey, it could be 600 if that's the what the market thinks. um, but yeah, I'm always interested at
Yeah.
this point. You said March, which is alarming. I'm always interested. That would be the Feds. That would be based around the Feds doing something next time. Not this time. Next time. Interested in that September. Was it September 405? Was it September 405? I'm interested in that action, but it sounds like that date shortened up. That's what you're telling me. Are they moved? People moved closer in that opinion and a little higher up.
That's that's kind of the what it looks like. That's the story they're telling to me right now is that the sustained move down to 400 is not really kind of what they're after, what they're seeing right now. And instead, uh, what I see is you take the math on that that 425 for 3.8. If we were to move to 460 in February, by in early February, that position would still be okay. But that's still a pretty significant move down. So if these puts are going to do anything, they got to go ahead and get started. And when I see them just let them, they don't even close them. It tells me they're just hedging. So they're willing to just burn those up in order to, because they're positioned higher, whether it's in SPY or kind of other stuff. So
Yeah, yeah.
um,
So that's just the
so it's
insurance
just
for the downfall of the overall portfolio.
exactly,
Yep.
yeah, that's
Yeah.
what I think's happening there.
Interesting. But they just
So
move. So
it's not the best for
they
directionality.
they move that up in shorter term, which means to me they have more clarity.
Yep.
Is what that stands out. That just sounds like they have more clarity on something. Um,
Yes, I think that very well could be.
which kind of fits where I'm at. Like I think, well, not where I'm not picking a side or anything, but um, we're gonna get the rates this week. Good time talking about that. We're gonna get rates this week. We normally don't try to let that affect us. Just trade the charts, trade the volatility. Um, and we're gonna pause. Like 90% sure everyone knows that. So business as usual. It's the next one that's gonna matter, and I don't know what's gonna happen there, but I'm in the boat that it's gonna matter. So that's
Yeah.
why I'm following the story of that, and I'm so adamant about that because if I'm coming up with even a quarter or two overall thesis, that's going to really come into play. Um, I mean, obviously, I'm looking for a pullback right at this point. It's when if the pullback is like in a month or is it in a year, it's going to be affect how I play dramatically. So yeah,
When people say like is SPY overbought to you, is that even something you could
well,
say?
it's an ETF, so it doesn't really get over. That's why I don't play those
Yeah,
much. It doesn't. I
yeah,
mean, you can't. It's not. No. Is the market overbought? Yes. Is SPY overbought? No. You don't overbuy SPY. It's an ETF.
exactly.
Okay,
Yeah.
so here's why. Here is a real quick. I mean, so it don't sound like I'm just like picking a side and saying, "Ha, you should know, dumbasses." Um, so SPY I think it's every year. Might be quicker than that, but they move stuff in and out, right? Like they throw out the bad ones and they bring in some good ones. So it basically gets to shed the bad news, and it's made to constantly go up. Um, in general, it just shouldn't have the as volatile moves. That's what SPY shouldn't have. But the overall direction of it should always be up because somebody's managing it and kicking out the bad stuff and bringing in new stuff, and then you constantly grow. So it doesn't really matter about the business; it's the overall market growth. Um, yeah, or overall U.S. economy. But I get it this time. It can be the world economy in that regard. So yeah, yeah, no, it can always go higher.
I talked about Apple breaking down at 185 a while back, and it did, and then it came back. As long as Apple has a ramp to 200, I don't think you could like SPY could just keep going.
Mm-hmm.
Because there's so much passive buying um, and that narrative of Apple 200, still out there. The SPX 5000 idea is still out there. So I mean, it's so we could definitely get to a point where we challenge some of those numbers. I picking some levels on SPY is kind of tricky for me this week, so I'm going to throw a couple things out there and we'll
Go for it.
see where this lands. Okay, so I'm thinking I would like to see. I'm going to say 480.43 is going to be my downside, and I'm going to go 491.13 is going to be my upside.
Still to the up. Lots of ER this week, so I do think we get some volatility. 482.81 was my downside. I just kind of picked the level off the weekly that was respected last week. A little bit above you. I just don't see this going away. And then let's go. I mean, again, we're just pulling numbers here. So 494.94. Yeah, because that's just where we are. That's just where we are. I don't want you to take that level serious. So the sky's the limit. Um, yeah, I'm still kind of where I was last week until I see a reason to go the other way, and I just don't really see it yet.
Positions on Monday's options that they may have held over the weekend. I'm not sure. But it's 488, 489 calls, and then it's 487 puts. So all of those are they're kind of close to where we are. But what to watch on those, and I think you'll probably see Goose post about it or post the SPX equivalent of those strikes. It's what are they going to do with those during the day on Monday? Where are those going to open after kind of our pre-market, our pre-market move? So, SPY's all about that zero DTE stuff. So you just want to see kind of where they pile in, and the way that how's Monday going to set the tone for, where we're going the rest of the week. Some of the bigger earnings, coming up, kind of your big dog names are kind of midweek or late in the week. So that'll be something to update. I might have something for you Wednesday on some of those names, and the volume on Apple with them reporting on a Thursday after hours, going to be crazy because those are going to be tempting lottos for people. But historically, Apple's one of the worst earnings plays to try for, because because my inclination is it's going to drop some after hours, but every time it does, people just buy it right back up. So it's hard to get that sustained move down.
Yeah, I did want to sneak in that to the SPY. It's not designed to go up 25% a year. So that's something we have going for last
right.
year.
Yeah.
That's the main overall thing people should pay attention to. Probably won't help you this week, but a good thing to have in your arsenal. I try not to look at it every week until Wednesday or Thursday. So, yeah. We'll see how it goes. I'm with you on the big names though. Definitely able to bring some volatility in the market. So should be a good week.
Something I said, guys, must have been like 6 months ago by now, but I thought that the only catalyst I saw for a big downturn in the market was after they cut rates, that they let the air out of the balloon at that point. But the thing is that I don't want to even call it a crash. I mean, it's a significant sustained pullback. That's like where I could see that happening. So I would be mindful of that, because to me that rate cuts they're like a new story. It's a new chapter. We've been in this chapter on the quantitative tightening and the pause. Like, we've been on that story for a long time. So new story, you get a pullback to reset some things. That's I still see that probably happening.
If you didn't get the 370 crash, be here for the 430 crash.
Yeah. There you go.
And if you didn't understand what I just said, stop fucking trading. Sorry.
Yeah, there's a crowd that says, like, every gap has to fill. Well, we got some gaps on SPY that are,
sure,
I mean, maybe not going to fill in your lifetime, people.
Yeah.
So instead, I think that you look at these major pivots, and some of these levels, some of the UNC levels, they're not going to go away. That's gonna get tested down the line. So
when it goes that way, we'll find it. 411 worked fine last time. We won't even talk about that.
Yeah.
Yeah. we did extra long sesh here. But yeah, like, subscribe for more, or what? Follow me on Twitter.
There you go.
Follow the professor on Twitter. He's an old guy too. All right,
Yep.
ready to get to work? Ready to get to work?
Yeah.